If, like many people, you're fed up of the affordability calculators saying you can't afford a house, there might be a few new things coming in the mortgage industry that'll help you on your way. Hi, I'm Sam Fox. Welcome to my channel on YouTube. I'm here talking about money, mortgages, finances, property, affordability, anything that will help you understand the home buying process and make life a little bit more stress-free. So if you like this content and you want to hear more from me, do me a favor, like and subscribe, and make sure if you have any questions, drop them in the comments below. So let's get to it. So there is a brand new lender that's come to market called Remortgagers. Now they've introduced a new offering that allows eligible borrowers in the UK to secure mortgages up to 7 times, yes, that's 7 times their income. Now that's a significant increase from the typical 4.49 or 4.5 or 4.75% cap that you see with most high street lenders. Now this initiative aims to assist individuals struggling with affordability in the current housing market by boosting it way above any of its competitors. For those of you watching, we are officially partnered with Remortgagers. So we're going to be going through their criteria and eligibility to make sure that you understand exactly what this product entails, pros, and how you can apply as well. So the first thing, like I've said at the start of the video, is the loan to income ratio. Now this is 7 times annual income. Now for far too long, people renting or people buying in other parts of the UK, not just where we're from up north, have struggled with mortgage affordability. Let's face it, how many times have you been onto a lender's calculator and just not got the required amount? Now the way that they're funded is different to the high street lenders anyway, but I won't go into all those sort of technicalities, but it means they can extend that mortgage term, they can extend the mortgage fixed products, and they've got some fantastic ways of boosting your income to 7 times. So let's start with incomes then. Now you'll need to be on 50 grand per year for joint applicants, or 24 grand a year for single applicants to apply for a mortgage with them. To achieve that top rate of the 7 times income multiple, you will need a loan to value of 85%, meaning you need to find 15% deposit towards the purchase. Loan amounts are from 50 grand up to £1 million. Anything over £1 million can be referred to case by case. At the end of the day, these guys are here to support mortgage lending and open up home ownership to new people. Now the term, it can be up to 40 years as a maximum. Obviously there are shorter terms available if you wanted to, but they can extend that to 40 years. So if you are borrowing extra amounts, you can mitigate that by having the longer term, lower mortgage payments, but as we've done videos before, the longer the mortgage term, the more interest you pay over that period of time. The income assessment on employment, they can use up to 80% of variable income, including bonuses, commissions, overtime. So that's absolutely fantastic. They can use so much of that. Now the key features of this are, there's a 10-year fixed rate and 15-year fixed rate terms. Now, some people might be thinking, oh, well, I don't really know if I'm going to stay in a house for 10 years. But Remortgagers have a really good view on early repayment charges, meaning that unless you're refinancing from one lender to another lender and staying in the house during the fixed period, that's when you'll have an early repayment charge. So if, for example, you become separated or you need to move properties, then there'll be no early repayment charges, meaning you're going to get the security for that length of time, but you're also going to get that desired flexibility. Now, like all these things with the mortgages, there are some key considerations. So affordability, looking at the higher borrow amounts means larger monthly repayments. So ensure your income can support this. Like I said before, you can take a longer mortgage term. The caveat to that is the longer the mortgage term, the more interest that you repay. Interest rates might be higher than some competitors. So for example, a 10-year fixed rate might be around 5.35% with a 40% deposit, where interest rates with a high street lender may be somewhere about 4.2, 4.3%. So rates might be a little bit higher, but you're paying for that security as well. And you're also essentially paying for them to have the ability to stretch that income multiple as much as possible. So whilst offering generous borrowing limits, these mortgages aren't portable. So if you move to a new property, it does mean you would require a new mortgage application. But like I said before, if that is the case, then there's no early repayment charges to pay. So let's look at how that could impact a household. So if you're earning, say, 60 grand a year, your borrowing ceiling could be up to £420,000 with Remortgagers, compared to around £270,000 with a traditional high street lender using an income multiple of just 4.5 times. Now, the increased borrowing capacity can make a significant difference in accessing desired properties as well. So that's an extra bedroom, it's a driveway, it's a bigger garden, it's in a more desirable area where you want to live. So you name it, if that is going to be something for you and you need to boost your income, Remortgagers might be the way to unlock it all. Now, I don't doubt for a second that when this uptake increases, we're going to see more changes in the market. Now, the FCA have recently had consultation papers and reduced the restrictions on lenders. And again, I won't go into all the technicalities of capital adequacy that they're required to have in the bank so they can lend people money to people like me and you for mortgages. But what I can see is that other high street lenders should seem to follow as well. I called it a few years ago with 100% mortgages, and I was told on a panel debate that they would never make a comeback. What happened? 100% mortgages? What? They made a comeback. So I reckon in the next 6 to 12 months, we're going to see more lenders start to push the boundaries of loan to income values and help close that gap on renting versus owning and make home ownership a reality for more. And that's it from me. So what do you think? Do you think this is a great product, or do you think this is going to cause even more problems for the housing market? Drop them in the comments below. We'd love to know. And if you've got any questions or you want me to check your eligibility for a mortgage like this, drop me an email. It's sam@ukmc.co.uk. I'll see you soon.